following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great week. Be impeccable with your word. Express your love. Impeccability of the word can be measured by your level of self-love. If you love yourself, you'll express that love in your interactions with others, and that action will produce a like reaction. Market-wise, let's take a look at it out here. We have the Dow Industrials down 397. NASDAQ off 156. S&P's down 45. Gold contract up $7.90, trading at $15.79 an ounce. You get silver flat, $18.09 an ounce. Light sweet crude down $1.21, trading $52.97 a barrel. Notes and bonds. You get the 10-year note up 19 ticks, trading 130.28. 30-year up a point and a half, trading 162.01. And King Dollar. King Dollar up 109 ticks, trading 97.992. The euro is at 110. The yen is at 108.96. And the pound is at 130 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you get all the major indices gapping down out here today, folks. You're going to have volume behind the move. That being said, the bottom line is that if we take a look at the S&P right now, the SPY, you're down there with 54 million shares. You're coming into 77 million. I expect we're going to do around 77 million. But you get a little support here. And what does happen is this, is that the bottom line, this market has no doubt has shaken everything off. Long period of time. You have the coronavirus, serious business right across the world. World indices are down. You get the gap down. The real kick is going to be what kind of a counter trend bounce you got, because I suspect this will be a counter trend bounce. The run was extraordinary, no two ways about that. When we take a look at the SPY, you can go back to October 3rd. You were at 284. You run all the way up. You hit a high out here last week of 332. So there's no reason that you can't get basically a decent pullback. And if we get a pullback, as today, you're going to see you get a two-way market out here. And the two-way market, of course, would be how do the bounces come in? This is actually the perfect week when we're talking about bounces. The reason being is this. The amount of earnings that are coming out this week could basically get that little bounce going that I'm thinking we're going to get. If you come over to our website at TFNN, what you're going to see right in the front page under featured content is the morning market report. My son Tommy does this every morning as well as in the afternoon. Want to start your day, folks? Start your day right there, because the bottom line is that the lineup this week and the amount of information that's on that front page is huge. It's the 145 S&P stocks that are going to report this week. And we're talking monsters inside the market as well as inside the tech space. After the market close out here today, we're going to have Whirlpool. Tomorrow morning, they really start kicking off. You're talking about Harley-Davidson, Lockheed Martin, Pluto, United Technologies, AMD, Apple, eBay, Xilinx, Starbucks. Wednesday, you get into Anthem, you get into Boeing, you get into MasterCard, McDonald's, Microsoft, Facebook. Bottom line, big numbers. Thursday, Biogen, Coca-Cola, Eli Lilly, General Electric, Hershey, the list goes on and on. So you can get the whole list, folks, right over our website at TFNN, right under that morning market report. So big numbers are coming out there, no doubt. Gold contract out here, bottom line, you're up $9. You get volume behind the move. Gold's in a complex ABC structure on the way up. Now, this is where it's going to get really interesting. The reason being is that we're approaching now the B point. The B point in the gold market is 1590. And at 1590, you're going to need more than 559,000 contracts once again to have that confirmed ABC structure up. And we are talking the price projection at 1704. We've done 378,000 contracts out here today, which is good contract volume. But guess what? We're going to need almost 559,000 to be exact. Bottom line, if we take a look at the XAU, the HUI, these aren't acting any better than the market is out here today, folks. XAU got up to a price point today of 106. You're trading at 103.29. The GDX, we take a look at the GDX. What's happening with the GDX out here? Had a high out here today of 29.66. You're at 29.12 right now. You don't have enough volume going into the swing highs that were generated out here on the 3rd of January. So kind of deviant behavior, no two ways about that. You know, I've seen it a dozen times in the marketplace. Now, this is where this can get really wild. And what it is this, is that you get a downdraft in the S&P. You know, most of the time you see, you know, gold can move higher, the equities can move higher, until if that downdraft in the S&P is going to be a much larger downdraft, that's where the heads up is right across the board. That you better make sure you keep stops in I don't care what sector you're in, because if they're going to basically sell everything off, I suspect that, you know, that's exactly what will end up happening. In this particular case, I think what we have inside the metals market is that the metals market has gone up so dramatically that they're trying to take a few profits off the table. Because if you take a look at a lot of these equities on a percentage basis are up pretty dramatically within 3 months. You know, in Eagles 51 to 61. So you get big numbers up here. But we certainly are going to need more volume as these equities push into higher price. The note and bond market is continuing to say that interest rates are going down. You had the TLT break topside on Friday, took out the consolidation. The TLT is up an additional $2 today. The TLT's making its way to its all-time high, and right now I believe it's only $4 away from it. So this is going to be a monster heads up. Yeah, it's $4 away from it. Yeah, all-time high is 148.90. Right now we're at 144.16, and you very well could have a monster ABC structure on the way up. You know, that's how this TLT is set up. So you're talking about some major numbers inside of the note and bond market and the debt markets in general. Some of the higher volume equities out here today. Where are we? Let's go. Let's take a look at this one. So we'll do this one. Okay, so you have right now, you get Chesapeake Energy down 2 cents. You got Advanced Micro off $1.12. Apple's a big one, $9.39. They're selling that baby down. They're selling Intel down. That's down $2.60. Transocean's a big number. That's down 10%. That's going to have some big problems. Beyond Meat's up 5. Stay right there, folks. Come back when I'm at Mr. Steve Rhodes.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 373. Nasdaq's off 151. S&Ps are off 42. And if we do take a look at the coronavirus out here, folks, so you got the United States advised its citizens to reconsider travel to China over the virus. The cool news here, folks, this is really good, is that inside the U.S. we do have 110 people that they are monitoring, okay? But thus far, you only have 5 cases that are identified with the virus, and there hasn't been another new disclosed case in the last 48 hours, which is really cool. I mean, that's a big number, folks, okay? So we'll cross our fingers there. You need more than crossing your fingers, I understand that, but that is good news. In China, not so great. In China, the death toll is up to 80. Confirmed cases are up to 2,744. A couple of the banks are telling their folks to start working from home. Credit Suisse was the first one out there that did that. They've extended their holiday until February 2nd. You know, because what they don't want to happen is they don't want everyone having to travel right back to the place that they left from. Because in Wuhan, there's 11 million people. Well, 5 million of them had left, folks, before the travel ban, because that's a factory city. It has 500 huge factories. People basically live right at the factories or near the factories. They had already left for the lunar holiday. So you can see what they're trying to do in China. Right? Anyway, stop the movement going around. Big number. What has happened because of that, no doubt, it doesn't matter what industry you go to around the world, these things came down, and they came down hard. The DAX, which had just hit an all-time high last week, that was off 371 points today. Well, let me give you the percentages. It's probably easier. So, yeah, so in Europe today was down from 2 to 2.68%. Asia's closed. They will be closed until next Thursday. Let's see, what day is today? No, until next Monday. And we'll see if they get those babies open Monday. What did happen before they did shut down is that you had the Shanghai came down pretty hard and fast. You know, the Shanghai went from a price point of 31.27 down to 29.76. And I suspect that wants a lower price. What the Shanghai has done also is that as you were moving lower, you were moving lower with a huge expansion of volume. So it can get to the lower end of this consolidation. which is about another 100 points down from where we are. Yeah, just about actually 120 points. The oil market. So let's go to take a look at the oil market. Oil market, you know, for quite some time has been weak. It's been in a consolidation between the $50 and $61 area. This thing came down hard and fast. There's no two ways about it. Started after it made its all-time high, well, not all-time high, high for the year, on January 8th at 65 bucks, and now we're down at 52. You get volume behind the move once again. So the bottom is consolidation out here. I believe is right around the $50 area. Yeah, you get $50.34. This thing, that's where it wants to go to. If we take a look at the XLE, what you're going to see is that the XLE has been lagging for quite some time. XLE just went from the top of its range of $61. Now, it's intriguing because we're talking the same numbers from the contract, the oil contract, the physical contract, to the ETF structure inside the oil market. It just happened to be the same 50 to 60 area. So the lower end of this is $54. We're already at 55. That being said, what it looks like this particular time is that it looks that the XLE are going to blow away its lowest one swing point and then go after the 51 area. Now, if that's the case, what we're going to see, let me just go back to, let me see this for a second, yeah. So I want to go back to those earnings because I believe Chevron and, yeah, there we go. So coming this Friday, Chevron as well as Exxon are going to be coming out with their numbers. So if we come over and we take a look at Exxon first, XOM, what you're going to see with Exxon, that also went south very quickly. You're down another $1.50 right now today. We just went from 71 to 64 in 2 weeks. And, oh, this is going to be trouble. I see. Interesting. Okay, so $64.65. We hit 64.82. This is at the lower end of its consolidation already. And let me pull this. Come on. This looks to me like it's going to blow this thing away. And if that's what you get, then we're going to be down at 56. Yeah, this is really dangerous for Exxon. So this has been pressing lows for quite some time. But yeah, 56 looks like it's on the agenda. And Chevron has been much stronger than Chevron for quite some time. Chevron also just fell apart the last couple of weeks. We just went down $12, $122 to $1.10. And this is still in much better shape, Chevron is, yeah, in a big way. So Chevron can, first leg down is $100. You're at 110 right now. I expect that you're going to get there. Rig. Now, this is going to be interesting watching Rig. The reason being is that Rig had a huge counter-trend bounce. This thing has been pushing lows for quite some time. As it's been pushing lows, it has volume at those lows. The lows we're talking about is $3.76. Rig went all the way up to $7.28, and in a few weeks just gave it up in spades again. Yeah, we just went from, well, it's more than a few weeks. Yeah, and well, in a few weeks we just went from, yeah, we went from $7.28 to $4.66. You're coming into the bottom, and you get some volume as you come into that bottom. So this is going to be a big number. You know, the lows of 376 looks like they want to get hit. If, in fact, they get hit and they break, then that is going to be the next candidate to basically get into bankruptcy inside that oil market. They've had some huge problems inside the oil market. And what it is, the problems have been the amount of debt that these companies have taken out. Paying back that debt, even with oil at $50 to $55, has not been easy. That's how this baby is shaken out. The Apple, let's go take a look at Apple. Apple's down about 3% right now. Not the end of the world on Apple. You're down $9. Apple, I think, can run to 282. Right now, you're at 309. You know, that would just be a natural retracement in a market that has gone exponential. Apple in 6 months has gone from $192 up to this 309 number. So big number. Platinum. Let's go take a look at the platinum market. We got a couple tigers and tigresses that want to look at the platinum market. Let's see what we have here. So platinum, we'll do the January contract. No, we got to do the active contract. One second. It's got to be March. Platinum. April. Okay, cool. So platinum right now is trading at 989. Last 3 months, it went from 874, 1,046. They put this on a couple-year contract, couple-year chart here. Actually, PL1, let me do it this way. PL1. So PL1 gets me the generic contract, so they tie them together. Put that out 10-year monthly. Okay, so you're coming up to the top of the consolidation, which is this 1,046. Yeah, I'd say Platinum's still building cars. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 400, Nasdaq's off 159, S&P's off 45. We're looking at the platinum market, folks. So what you have is this. Platinum, you know, this has been at these lower levels now for almost 4 years. October 2015, you can bring it back to, you know, last 3 months, it did have a good run, 867 up to 1,046. The number that you want to keep your eye on out here is the about 1,022. If we launch that, then you get the shot to get up to the 1,050 level. But real on the short-term basis, on the larger-term basis, then the 1,200 number is there because. See, the 1252 number, we had come down so fast in July of 2014. Platinum went from $514, $1,514. 2 years later, it was down at $812. When you come down that fast, folks, there's nothing in the middle of it. We've been consolidating out here, as I said, almost 4 years right now. So if it can make it over the consolidation, then you'll get some action inside of that market. In fact, if I just, I'll put up the gold contract for a second for you. You can see, because the gold contract also had a monster consolidation down at its low before it actually took off. And you're going to see that that consolidation went from June of 2013, we didn't break out of that until, look at that, June of 2019. So you're talking about 6 years. Then it broke out at 6 years. You got let's see, you probably got a couple ABCs up. This is pretty interesting, actually, looking at it this way. So your B point would be 1559. Yeah, no, that's the big ABC I'm looking at. So your big ABC that's out here is 1704. It's a nice setup too, man. And your highs, of course, out here, all-time highs are 1920. And that 1920, of course, that is, when we're talking about all-time highs, that is in U.S. dollars. If we take a look at the gold, and you take a look at gold at almost any other currency, gold has blown away the all-time highs that were generated out here in 2011 and 2012 in different currencies. Pretty dramatic, too, no doubt. Let's go to Mike in Warsaw, Poland. Hey, Mike, what's going on, brother?
Yeah, hi there, Tom. Thanks for taking my call.
So
the airlines have all been taking a beating lately, and I have my eye on Air Canada, ticker symbol AC, but on the TSX.
Okay, so Air Canada on the CSX. Let me do it that way. Okay, so the low for the year is 28, the high is 52. It's trading at 44. Okay, so...
You see that high volume from August?
Yeah, I'm looking at it right now. Well, actually, you get a couple of them. I see August 30th, 42, 18 million, and the breakout area is 41. I wouldn't bite yet. That's the bottom line.
Okay.
I would see how it's going to try to hit this $41 to $42 area. Because what you have is that you came off the high with volume. You know, last week we went from 51 to 45, which is, you know, normal, especially airlines, and a place that we're all going to move around less. Yeah, I'd give it some time, man. Let me see when they're coming out with numbers here.
February 19th.
Okay. Yeah, I get the 14th, but yeah, I'd give it some time, man. I wouldn't jump right here.
Okay, so we're looking at the test of that high volume low.
It would be
the high bar of that high volume bar.
Yes, exactly. The high of exactly. That's what you're looking at. Yeah.
The high of the high volume, right.
And that's, so what happens here is this. That was the breakout area. It actually, the breakout area started at $34, and you can see just nice acceleration all the way up to 41. But 41, that's some solid support, man. If you break into that, then you are going to go to lower price, because that's a big, big buyer there, and it's a true breakout. So, and of course, it went from 41, went all the way up to 52. So the breakout was real. Let me just put this back on a monthly for a second. Yeah, it's at all-time high. Yeah, I'd be looking, to see how it hits the 41.
41.
Yeah.
Okay.
Yeah.
All right. Thank you very much.
Cooking, brother. Have a great one, man.
Bye-bye.
Have a safe one. 877-927-6648. Caterpillar. Let's go take a look at Caterpillar. They're going to be coming out with numbers this week. Caterpillar come off its high. The danger in Caterpillar now is that it was up at these highs and was consolidating, going all the way back to October. So you had a lot of activity above the 135 price point. You're down $4.50 right now. I suspect Caterpillar looks like it can go to 130, which is another $6 down. That, no doubt, is a big number. They're coming out with their numbers now on the 31st, which I believe the 31st is going to be Thursday. Tesla. Now, this animal here, this is pretty wild, folks. You get a day that the markets are down, let's say, 1.3 to 1.8%. That being said, Tesla, if we go over to Tesla, Tesla's not done going down yet. You take a look at Tesla. Tesla's down $8.58. But what Tesla's just done is that it come back into where it was breaking topside from. It only has 12.4 million shares. So what it did is it rejected lower price. It's going to have lighter volume, and you get a high volume high. So this is kind of twisted in the aspect of, you know, what you would think may happen on a big downdraft. And in particular because, you know, bottom line, what you have with Tesla is that they start just pushing their cars out, and they're going to be pushing a lot more cars out in China. But this is not done by any means. It looks to me like you're going to go right after that 594 area once again. So it's a big number. U.S. Steel, they're going to be coming out this week. This is a disaster in U.S. Steel stock. Has been for a long period of time. U.S. Steel just went from $14.52 down to $9.10, and we did that in 6 weeks. U.S. Steel right now, they're coming to the bottom of their consolidation once again. Let me pull this back here 1 second. Yeah, this is serious business. U.S. Steel has been serious business for a long time, actually, folks, meaning that it can't catch a bid and keep a bid going. And people keep buying into it because it's U.S. Steel. It's kind of one of these deals that, you know, U.S. Steel had a brand for years. It takes a long time to basically get a brand to lower price. That being said, guess what? U.S. Steel is on its way down to 852. That's the breakout area from March of 2016. Now, if that can hold, it cannot. If that does not hold 852, then there's going to be some serious problems, because 667 was the prior week of that. You break 667, and then it's curtains. This breaks 667, and we're going to see U.S. Steel going bankrupt. That's how this is shaken out. This has been, you talk about a low-end consolidation. This has now been in a low-end consolidation for 12 years. 12 years. And, you know, listen, companies can hang on for a long period of time. And U.S. Steel's case, okay, they got basically the government behind them to basically tax the heck out of and tariff the heck out of all the other companies, and guess what? It still didn't work for them. That's the real bottom line. And you know what? Because if you're real supply and demand, it is what it is. And guess what? When you're in a business that your overhead is too high, and you know you basically have not geared up with new equipment, it's a problem going forward. Dow Industrial's down 425, Nasdaq's up 168, S&P's are down 50. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 413, Nasdaq's up 164, S&Ps are off 47. Let's go over to Twitter and take a look at Twitter for a second. So you get Twitter, bottom line down 40 cents, nothing heavy there. Last 6 months we went from 45 down into the, let's see, we get down to 28. You get a bounce up here to 32. Yeah, it's going to be tough to get through this downdraft. That downdraft was pretty vicious in October, 41 to 28. That being said, now the reason I've just brought up Twitter is that you know we get Super Bowl weekend coming up, and so the NFL teams, most of them just got hacked. Their Twitter accounts. So check this out. So officials verified Twitter accounts on a number of teams, including Super Bowl bound San Francisco 49ers and the Kansas City Chiefs. No longer have high-profile photos on their social media service. A tweet sent by the official Green Bay Packers Twitter account reads, "We are here to show people that everything is hackable," and attributes the breach to a group called Our Mind. So here's the tweet right here. And the Packers, replacing pictures of the Packers. "Hi, we're back. Our Mind. We are here to show people that everything is hackable. To improve your account security, contact us. contact@ourmind.org." Bottom line is it's pretty serious business, folks. When you think that, you know, these accounts get hacked left and right in a big way. So we'll see how the rest of this shakes out going forward. But it seems like technology security is going to be on the front burner for a long period of time. There's no two ways about that. Huge numbers. The XLU, let's go take a look at the XLU. So the XLU is utilities. Utilities, of course, have been on a tear for a while. Why? Because interest rates are staying low. Right now, it's trading out at the $68.23. This is probably close to an all-time high. It should be. Yeah, it is. In fact, it hit an all-time high today. Inside of the XLU, holding-wise, what you're going to see here is you get Next Air Energy is 13%, Southern Company 7, Duke 7, Dominican is 7, American Power. Bottom line is that these are, you know, utility plays, interest rate plays, and guess what? Interest rate-wise, folks, this has been a market that is absolutely incredible. There's no two ways about that. When you can have markets at all-time highs, yet interest rates continue to higher price, lower yield. And the amount of buying inside that market, folks, is huge. This is not a small amount of buying inside the 10-year, the 20-year, and the 30-year bond. It's a monster. Buy. Every time that we pull back, what has happened, let me pull up the 10 so I can show you something for a second, because it's really intriguing. Like these different sectors, they trade differently. I talk about the gold stocks, how they trade differently. The bond market does the same thing. What the bond market likes to do, I'm going to bring that up. The bond market, the last few times that we've come down, meaning the last 2 or 3 years, the bond market comes down hard, right? Comes down hard on price, but yet will not and does not take out a major swing low. That's how this seems to work. We've been in this consolidation, at this high-end consolidation now since August. And what you're going to see is that, the week of September 13th, we came down hard, man, 130 to 128.02. But you know what the swing point, folks, was? The swing point was 127. So it never made it to the swing. What do? We go topside again. We make a new all-time high in October. After we make an all-time high in October, we come down hard once again. We go from 132 down to 127.31. And remember what the benchmark is. The benchmark is 127 flat. Does not break the swing point again. Then you get a much smaller bounce. You only go up to 129, and then we come right back to 127.31 again. Now that contraction too is on tremendously lighter volume. It says quite a bit, folks. When you can't break a swing point on a regular correction, it's showing how many buyers there are versus how many sellers. It's pretty amazing. And if you happen to be looking at my chart here, what you're going to see is just this the last run that started higher since October. We have not broken a swing point, a lower swing point. Each and every point that we're breaking is that we're breaking higher swings with volume. And of course, when we take a look at the structure around the world, we're still very high in that context. We just broke the 1.6 inside the 10-year. We're at 1.599. That being said, guess what? If you're in France, you're at a negative 10-year right now. France just went negative again. Germany just went negative again. Sweden has been negative. Netherlands have been negative. Switzerland's been negative. But these are big numbers, man. If you're going to give your money, France right now is at a negative 0.1 of 1%, and Germany's at 0.3, almost 0.4 of 1%. So you can see where this whole thing is going. And where it's going is that we are continually going to be higher price, lower yield. And why? Well, guess what? Because there's more buying than there is selling. That's how this shakes out. And that's basically, I would say, it's world money. So much cash that's on the sideline. It's like all they're trying to do is that you're going to give cash to the European countries where you basically can give them $100 and they give you 98 back or 99 back, or you're going to give it to the U.S. where you give them $100 and they give you 102 back. It's that cut and dried. That's how this thing is shaken out. The thing that still has huge divergence, of course, is that, when we go, let's go to Germany. We go to Germany, they're at negative rates, but they're at all-time highs also. I mean, today, yeah, they got whacked in a big way, just as it's down 2.5%. But guess what? They just broke all-time highs, too, from going back to 2018. So there's huge divergence in the aspect of where money is versus how much money you're getting back on your money, and we'll see where the rest of this is going to shake out. What that is doing, it's keeping strength inside the metals market in a huge way, keeping strength inside the utility market in a huge way, because both of those basically, the lower rates stay, the more that people will get into the metals, because guess what? Metals don't pay an interest, okay? So that's the argument there. But guess what? If money is negative, well, guess what? The other side of that is metals can go higher and much higher. And the utility market, basically, it's all about what are they paying interest rate, dividend rate-wise, and they're paying good dividends. And guess what? We're all going to have power for quite some time. And the power we're talking about there, folks, is the electric power, not the oil and gas power. The utilities are the electric power. And when we take a look at the regulators, when you take a look at how they work, the bottom line, all they need is a lot of soft money to pay off the regulators, pay off the lobbyists, and no matter which state you're in. And guess what? There goes the electric bills up 1%, 2%, 3%, and they can seem, to basically pull off 2 to 3% pretty easily every year to 2 years. And that is huge money over the course of 10 to 12 years. So those regulated businesses inside the utilities, you can see why they're at higher price. Dow Industrials down 449, Nasdaq's up 176, S&Ps are up 51. We'll come right back.
I'm certain you you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 430, Nasdaq off 170, S&P's down 49. You're going to get volume in these markets out here today, folks, on the way down. The SPY right now is out there at 67 million. They'll be about 77 million inside the SPY. If we take a look at the indices in general right now on the NYSE, we're at 626. That means it's going to be over $1 billion. And then if we take a look at the Nasdaq Composite, you're running at 2.1. That's going to be about 2.5. When we take a look at what we like to look at, if you're going to get a bounce out of this market, the trend, which is the short-term trading index, 1.91. That's a decent number. We have 2 days now. Friday was 2.3. Today's 1.9. That's a big number. What is not is the panic number, and the panic number is the tick, folks. The tick, you're going to see out here, it says minus 1330, but guess what? That minus 1330 was on the open this morning, which you don't count. The bottom line is that the trend right now, let me pull this intraday, the tick rather, and you'll see intraday, it really didn't get over 1,000, I don't think. Minus 986. Yeah, minus 986 was the number. That's not even close to getting basically a bounce going. So what we won't have tonight is that most times that we go from here and then you have Asia that's opening. That's not going to happen. What you are going to see is that you're going to get, we're going to go right over to Europe. And, you know, Europe basically came down harder than we did today. Europe came down 2.5%. If we take a look at the DAX, that's down 371. And I suspect what you're going to see out here is that the bottom The consolidation it broke out from is 12,948. So you're down 371 today, which inside the DAX, I believe is about 2.5%. And I suspect what you're going to see out here, 2.7%, is that you're probably going to see the same type of movement tomorrow, meaning down 2.5%, something like that. Because what's happening is that we're coming into lows, we're finishing at lows, you're finishing with volume. It is what it is. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything we need is right inside us. You might as well have a blast with it, folks. Thanks for being here. Come join us again tomorrow morning, 8:30. Tom O'Brien, my son Tom, kicking it off, morning market kickoff. Come right back.